The following is a presentation of TFNN. It is now time for the Tiger Technician Hour with your host, Basil Chapman. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Basil Chapman.
Hi everyone, Tiger Technicians Hour. My pleasure to be here Monday through Friday in market days. And as far as I can tell, we've got a pretty nice market right now. Of course, GM came with earnings that were a little bit better than expected. This unbelievable. At this particular point, we've had more recalls and more potential problems that could occur with the automobiles in the whole industry right across the world, and yet sales are increasing. And you can only see that when the economy is starting to improve, and that's obviously what's been happening. So in the meantime, back at the ranch, because we're expecting a pullback. Yesterday there was a very sharp pullback in the S&P and all the other indices, but not the Dow. The Dow showed rotational strength. One of the reasons is that some of the big integrated oils did very well. Chevron and Exxon, it helped a lot. So right now the Dow is up 70 at 17,847. S&P is up 10 at 2,063. The comp index is up 21. Yesterday it was down very sharply at 47.49. Gold is down 16. Earlier it was down much more than that, 24 points or so. Now it's down 16 at 12.01. We're going to find out very, very soon whether there was a single, what I call the single leg A up phenomenon in the gold contract yesterday as it reversed after the Swiss, basically the Swiss people said we are not going to tie gold to our economy. And then what happened was gold had been down really sharply during the evening into the early morning, then it just turned around and had a very, very strong session. Now it's giving back some of that. You've got the silver contract down 24 cents at 16.45. Platinum's down 17 at 12.21. Copper's giving back most of its gains of yesterday. It's at 2.90. I have to tell you, I'm really concerned about copper pulling back like this. Meantime, back at the ranch, we've got crude oil down 70 cents at 68.30. Trying to rally. I'm having a tough time trying to get off the bottom. Had a question from a new subscriber. I'm just checking it out now. I'll come back to it in a moment about energy. The XLE, I think that's worth looking at right here. And what else do we have? We have bonds down 30, down at 141.04. This is the H contract. So the H contract, of course, goes into March. I've got the TLT down 96 cents at 120.54. And the dollar has climbed to the 88.78. Let me show you something here. In fact, I'll do that right now. I'm going to take off the charts that I've got here. This is the daily E-minis, the December E-mini. I'm still going on the December contract. Look at that strong leg B up. There were two fighting patterns. One was the pattern that had the arch formation. I still think that's a possibility in the daily, but the weekly, the 120-minute chart, this is a big move. Why? Because it's going right into that level of resistance that was in between 2063 and 2070. So that area right there, not 2070, that has to be the close. Let me just double check that. That should have been 265-ish.
Daryl Martin coined the phrase.
So it's 263. We're at 263 right now. This is exactly where we should be seeing some resistance. It's going to be very interesting to see what happens. And if you look at the volatility index has given back quite a bit of yesterday's gain. Right here, look at this, VIX.X. And yep, it's given back. It's holding the 9-period exponential moving average at 323. That's where it is right now, down 1.06. Had a nice gap up and a close yesterday, but was a doji. Going to be watching this really closely. And the 120-minute chart, this is a little bit more than I would have expected. Pulling back like this in the 120-minute chart, it's going to make it really difficult to break to the 14.62 area within the next 2 days if this kind of strength is maintained. Now, what's very interesting is that I have so many charts. Maybe they're going to recycle, but they're all at D, E's, and F's right here, and I'm watching them very, very closely because they haven't really given the sign yet to say they're going to make new highs. And if I look at my Dow Quartet, look, GE, nice move up today, up 16 cents, but whoa, nothing like it was just a couple of days ago. It was up in the 2680s. IBM, of course, I'm not expecting anything from IBM, but it's part of my Quartet index. And look, Triple M is right now up near the highs. It's forming a consolidation formation, that oval pattern. If it starts to fail, it will go down below 154. Well, let's just say it's at 159.65. A close under 157.20 to 157 support. Anything underneath that, and you're looking at a failure pattern. Short term, that is, because the monthly chart is still very strong. And you've got, oh, look at that. Look at the weekly and monthly. And you've got UTX. One of my, like the GE is also a pilot indicator. High-level consolidation, but really not showing any leadership. Now, let's go to this. We've got a question here. Let me see what the question is. So I've got the XLE, which is the S&P Select Energy Spider Fund. Had made a peak F-top at 89.22. Let me just type that in so I know what I'm talking about here. 89.22. And it plunged down to the 10% correction, down to the 78.67 area. More than that. 78.67. 78.67. So that is, in fact, 12 points, 11.5 points. So that's a good 12% decline. You can always expect a bounce after that kind of a decline. But how does it fill the gap between 80 to round number high and 83.62? That's the first area where the 9-period moving average resistance is. Well, the 120-minute chart is showing some kind of turnaround activity, but here again, it needs to really clear 81.91, get to the 82.20 area, and if it can hold there, it will say, good. Now there's a little bit more extra that you can see for a bounce. Weekly chart still looks, and I agree, the weekly chart, let me just, hi Basil. Good morning. I'm a long-time listener and recent subscriber. Very much enjoy the show and listening to you. A wealth of information you have shared with us. Thank you very much. If you have time today or tomorrow during your show or via email, could you please look at the XLE? I bought the ERY on 11.26. So 11.26 is, whoa. Oh, 11.26. So you bought basically the XLE, because the XRY is the ERY is the trading vehicle. It's at 200 or 300% long. And it went from 86.21, the high of that day, down to the low, 8 points. That was a big hit. Current stop in ERY is a bit below the 9 EMA. Good. Now you've raised the stop. So let's go to the ERY. I just want to see what we're looking at. Apples to apples. Oh, wait, whoa. The ERY is the energy bear 3 times short. Oh, that's funny. I spent a little time just before the show started looking to see what the inverse XLE was, and lo and behold, it was ERY. It's the bear 3 times. I thought it was the bull. So, okay. So let's do this again. You bought it at 11.26. Nice. So 11.26 at 17.98. Got it. Okay. And Right now it's trading at 20.70, and you've got your stop just under the 1944 9-period moving average, and that I would agree with, at least for now, because if it dips as much as that, it's probably going to give back even more. Now let's look at your question. Current stop on the at 1925, okay, 1925, and below top of a high volume bar on 1113. That's using Tom's method. Very good. Okay. On a weekly basis, I expect XLE to go to at least a trough D. However, that's the XLE. Remember, I'm mixing apples and oranges. No, I'm mixing Golden Delicious with the green apples, but they are still apples. One is the inverse of the other. One comes at a different time to the other. So what we're looking at here is that I agree, because I'm also expecting that the XLE will go to a lower low. And that means that if the ERY in the weekly chart can hold for at least 2 out of 3 sessions on a daily basis, the week above 2282, above 2280, that would imply that there's a good chance that the top of that candle, the wick of that candle in the 25 to 38 area would be tested, and if so, the XLE is going to pull back. But that thesis I think is good, but at the same time, you sometimes can get an M formation. The H, lowercase h, goes to an M formation. And as it does that, it means that you're a bit at risk. That 79.65 for the XLE could bounce, in fact, to the 83, even maybe the 85, 45 9-period moving average, if that's the case. So I have to do a little bit of work here. The monthly charts is that the SPDR ETF XLE should drop much further. It should take out the low, and that's at 77.51. Weekly suggests so, but shorter term, you've got the 200-period moving average acting as great support, and you've had a little bit of a positive complementary action in the slow stochastic as it's rallied with the price, so that the low that's made here at this particular time at 78.67 has been met with a higher stochastic. That's good. And look, the price is now nicely above the 200-period moving average. Let's go back to the daily. So the daily says, yes, you are correct. There's a good chance that the XLE will rally. Now let's go to this ERY. If it's going to rally, okay. So this is A, B, C, DE. This is peak E in the 120-minute chart, and we've got the expected decline. The stochastic is on the 120-minute chart is turning down at 81.44, but it's still above 80%. That's good. And the MACD is turned down, but still shows internal strength. How am I going to work this out for you? I know exactly what I'm going to do. I'm going to take a moment, and I'm going to draw a couple of trend lines, and I will go through it just like you're doing. So I wish to protect the current profit, but not get out of the trade too early. This can either be a shorter or midterm trade. So, okay, I'll be back with the answers that I think is perhaps an answer to your question. Dow's up 65, S&P's up 10, and I'll be right back. Basil Chapman, Tiger Tech.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how EverBank can help keep your money thriving just the way you want. Is growing your money a priority? EverBank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? EverBank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen, live during those shows, and have access to all those charts. You can test drive the Tiger's Den, absolutely free, for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN, and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
With the launch of Tiger TV, TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, David White, Larry Pesavento, Andy Hecht, Thinkorswim, or Carol Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing. Basil takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Hi, folks. We're back. Dow's up 60, S&P's up 9. And we're going to go to the Exxon, CVX, that's Chevron, Schlumberger, Kinder Morgan, ConocoPhillips, EOG Resources, and Oxy. So here we go. Exxon. Nice bounce, got repelled at the 93.82 level. That's the 9-period exponential moving average, but it is attempting to have some kind of a bounce in the daily. Weekly has that H pattern, lowercase h pattern, and that says, yep, it has tested successfully so far. The left side low, that big candle of the 17th of October down to 86.91. This one just went in last week to the 90.11 area. This week so far, it's already 90.28, slightly higher. So it says that there is a rebound potential here, but 94.33 would be the real test if it's able to hold above 94.33, the 200-period moving average in the 120-minute chart, that says it's a good action. But the monthly says lower prices. It really looks like lower prices. CVX, same thing, except that it got repelled exactly at 114.19 was is the 9-period exponential moving average. And today it tried to bounce and it went right to 114.18 and now has pulled back. So that between 114 and 116 is going to be very strong resistance. When I go to Schlumberger, and I made a peak T-top in the daily, so we're going to be watching the Schlumberger SLB. Oh man, I followed this for years and years. Peak E in the monthly, it's gone below the 200-period moving average in the weekly. This one looks very weak. This doesn't look good at all. KMI is Kinder Morgan. This has been a monster. The last move is an ABC. Let me just double check. So that's ABC, DE, double top at E. It's holding well, high level consolidation. Weekly is still good. Monthly is still strong. This is the strongest of them all. When we look at COP, which is ConocoPhillips, and that is doing the same thing. It hasn't even been able to get to the 9-period moving average. This is much weaker. If I look at Oxy right now is at much weaker. It's not as weak, but it's very weak in relation to the stronger of these. When you're looking at Devon Energy, that has gapped down. It's not able to bounce very nicely. They all look like they want to test lower levels. So I'm now in agreement with you with your ERY. But you know what I'm going to say to you is that what you want to see, and let me just double check here. So that's the question. Yeah, I'm going to make two suggestions. One is, Will, that in your... Now, I've been looking at this. I'm just mad at myself because I did identify it when I was looking at the ProShares Ultra Bloomberg crude, and I was expecting a really sharp move up. And then I just backed away from it, and that was really silly because it's gone to a peak F. Now it looks like crude has the potential to bounce. But crude and energy prices, they're different areas altogether. I just wanted to do that so that when I'm looking at the crude, the US United States Oil Fund, yeah, they're all in down modes, but they are different degrees, and oil looks just terrible. 25.87 for the USO right now, down 45 cents. It's got tremendous resistance between 27 and 28.20, so I'm going to be watching this one closely. So I think you are correct. You're in the right ERY. I think you're in the right vehicle. I also think that your stop, I'd probably say if ERY is able to get to 2159, 2160s, let's say, by tomorrow or at least by Wednesday, without even breaking 20, then I would start to raise my stop on just a small part of my position, part of money management, that's all. But I can just tell you that in a move like this, if there's a break above 2284 in the ERY, and then once again, the ERY is the energy bear 3 times shares. I must tell you, it should go higher. It should go quite a bit higher. So watch this closely. I think you're in the right move, and you got him beautifully. So congratulations, Will. Now, a couple of questions, and I'm going to do this. If I'm looking at the action right now, I want to spend just a moment on this. In the volatility index, by the end of the day, if the volatility index closes under 13, I'm going to have to just admit that the internal strength in a rotational, because it's a rotational basis, meaning that if I was looking at individual stocks, they could look very poor. But within that context, within the sector, there might just enough strong stocks to rotate to keep the prices up. I'm going to have to reassess that part of it. I'll be right back. Basil Chapman, Tiger Conditions Hour, 1062.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
Who says you can't take it with you? TFNN says you can. With your mobile device and TFNN's live radio streams, TFNN has put it all in the palm of your hands. No special apps to download. No subscription fees for live radio or Tiger TV streams. We say you can.
Each and every time that the dollar ticks higher, S&P wants higher price. Each and every time that the dollar's ticking lower, guess what? S&P wants lower price. Dollar, the metals, and the S&P are going tick for tick.
We say you can. The Tiger Financial News Network. Smart investors and professional traders know you can. TFNN.com. Educating investors. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Hi, everyone. Basil Chapman. So what I'm anticipating is that by the end of the day, and I could be completely wrong about this, but that by the end of the day, the VIX from the 1330 level bounces a little bit, goes to maybe the 1345, maybe a little high 1350, and the Dow pulls back, and the S&P is a little bit stronger than the Dow. This is what I said to subscribers in my opening call this morning, that I'm anticipating that the Dow that the S&P will be a little stronger today on the upside than the Dow, closing a little bit higher, but the Dow gives back some of its gains and closes weaker today than the S&P, opposite of to what happened yesterday. Hey, we'll see. The day is very young. We'll see what happens there. Mostly what I'm looking at here is if I'm looking at the different indices. Look at this. Here's the Q. The QQQ series is sitting on the 9-period exponential moving average of 104.05. Everything about what I'm looking at says this is a Chapman wave methodology technique where it goes to F or G, but it doesn't go to recycle D, and that it should fail without making a new recovery high of 106.25. Let me type that in here, 106.25. And if that occurs, nothing will happen to the downside until there's a close below 104. And that could take a little while to do. But under 104, they're starting to give back a lot of the gains. And then the major support becomes the 103.20 to 102.30 area. That's number one. Number two is the IWM, which has a nice bounce here of 1.44, up 1.25% at 166.30. This is the Russell 2000 QQQs. That was the NASDAQ Power Shares. Those were the NASDAQ Trust. And this is the iShares of the Russell 2000 ETF. Nice bounce. Look at that. Over the 9-period moving average in the 120-minute chart, gave a peak C1, C2. So yesterday I was talking about techniques that I've spent a lot of time on over the last 3, maybe 4 months, refining and honing, that I'd used for a long time, but some of them were kind of relatively new in the whole process, meaning only just 5 or 6, 7 years old, rather than the 10 or 15, 20 years old of the Chapman wave 7 waveform, which actually goes back even more, goes back to 1987. But if you're looking at this, that peak C2 gave a perfect, like a D, like it's almost like a phantom D, just missed making the D. And now, 120-minute chart, it's making another cup formation, and says how that cup formation functions right now is going to be very important, because if there's a close above 117, it's at 116.32 right now. That says, hey, you got to be prepared that this could retest that whole area, upper area, because the weekly chart is still very strong, and leg B, probably peak B if there's no new high this week. MACD's good, stochastics at 88%. The monthly chart looked like it was a PEF failure pattern, but boy, just to drop that little bit from 120 down to 112, 103.54, maybe not so little, 17%. That's 22. That was a big pullback, yes, in percentage terms, but not from where it's come. That would say to me, hey, high-level consolidation, we're going to go higher in 2015. We might be shorter term pulling back, but that's a very positive aspect, and it's very unusual because this was the stronger, then it became the weaker of the sectors, of the indexes, and then all of a sudden it's back to holding the 9-period exponential moving average, even though the MACD has stochastic weak. That's a good sign, because it gives it time, rather than maybe price to the upside, at least it gives it time to consolidate. So that's the IWM. Now look at the NYA, NYA.X, that's the New York Stock Exchange, very broad, 1,860, I think, stocks. Look, it went to a peak G with a doji top, actually a silent doji top in the Chapman wave methodology. And that top, written it a couple of times here, let me just get rid of that. Alternate count. Okay. What we're looking at is that high on the 21st of November at 11,063 has not, 11,068 was taken out for G. So you got F, then you go to G, and G now, in the Chapman wave methodology, this is a perfect setup for the MACD and the stochastic to have a pullback. And what happens is F is very serious. G sometimes uses up that extra energy going to that extra higher peak, and I call this a smooth G. Let me show you why. This is called, in the Chapman wave methodology, the CD, introducing the Chapman wave methodology book, This is what I call a smooth G. Why? Because very often when you get it within 3 bars of peak F, it almost looks like you can barely see that there was a peak at F. And G is the one that fulfills it and uses that little extra time. So sometimes when it pulls back, it can have a pretty decent rally after a much shorter duration in bars than if it was just an F. And this is what we're looking at. Look, a nice bounce, hit the 9-period moving average. And we'll watch it closely. So far, it's not saying it has enough strength to take out the old high that was made just a week ago. Question in the den. Have you ever seen so many dojis on a weekly, Basil, in the IWM? Let me tell you something about dojis. This is really unusual. It's not so much that they're dojis. Look at the skinny little candles. Now, if you remember, what was the chart? Let me just see if this is the chart. I'm going to open this up here. No, I thought it was Apple. Well, it was Apple to a certain extent. Where was it really big? Smashed to the downside when Apple made its high. Lost the notation there. Yeah, as Apple was making its high, I remember seeing doji candles. They're not exactly the same. But let me show you something. Talk about it, doji candles. Look at this. I don't think I have ever seen as many doji candles at a high or going to highs as I have in this Dow chart. Look, this is 30, I think this is the 32nd session. Out of 32 sessions from the low that was made back on the October the 15th at 15,855 in the Dow on the daily basis, you've got 1, 2, not all of them are perfect dojis as represented by Steve Nissen's description of dojis, or even when Steve Rhodes is talking about dojis, but I'm calling them dojis because they're open and closed almost within within a tiny distance of one another, besides the wick that was formed. So it's 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15, 16. There are 16 candles. That's 50%. That's unbelievable. 50% of the candles in a move from 15,855 to 17,893. So let's call that a 2,000 in a 2,000 point rally. That is incredible. And what's even more remarkable, let me just show you something here, is the price has held the 9-period exponential moving average even today. Even yesterday, it closed above that. But it's now broken that 9-period moving average twice. That's the maroon line. And that's hinting that there will be a close under it at some point within 2 to 3 bars. It should have been today, but it isn't today now. Every time the markets pull back, there's been a sudden burst of strength. And look what's happened. This is a pretty good... Hey, only 2 hours into the opening session of Tuesday, and we're already in this very strong candle. That makes the area right here, that moving average there, 17,816, is going to be absolutely critical today. A close below it says, aha. Now we're going to start testing the bottom of the wick of yesterday's candle, which is at 17,726, and a close above yesterday's high of 17,827 says, no. You got short a little too quickly here, because we're going to test the old highs to recycle this waveform and make it complicated for you. That's the way it is. However, we've just got to deal with what we've got here. And absolutely, when you're looking at, look at this. When I go to the DIA, and we get rid of my notations from here, rotation so you can see this a little better. Look, from that low bar, there is an arch formation. We haven't gone to test the high of the arch, but in the meantime, back at the ranch, look what's happened. You've got a doji candle again yesterday, and you've got this candle today. Oh, incidentally, there's a slight difference between the diamonds, the Dow diamonds, the candles that are formed, and the Dow itself. Why? Because the Dow invariably tries to open at the previous day's close, whether it's going up or down. It isn't often that there's a gap. And when there are gaps, it's kind of serious. You must take it serious as strength, one way or the other. The Dow diamonds only trade at 9:30, and they can gap up and they can do all sorts of things. So the characteristic of an index is to try to keep the open and the close. Let me just show you. INDU. You'll see that hardly ever do you get a gap. Look, hardly ever do you get a gap. Why? Because they try to finish it, start the next day with the closing price. That's why. Look at the S&P, SPX.X. See, now the S&P is different. The S&P is saying, hey, I'm struggling, folks. I'm 500 stocks and I'm struggling. That's what it's saying. And unless it closes nicely above the 2,065.78 high of yesterday, not too far to go, 4 points or so, it's saying, you know what, that MACD and stochastic are really telling you more of the truth. And if it closes below the 9-period moving average. So I'm watching this because if you look at the XMI, the XMI, oh, where's my notation? CD, oh, I put it in, but it's all yellow. Let me get rid of that. Why didn't I change that? Was I just running through this as an exercise? What's going on here? Okay, so that's good. You can't even see, but I'm getting rid of some yellow notations. I must have gone there after I'd finished my overview section, which is always with a black background. So this is D, this is EFG. So this is going to be interesting, and I had anticipated that in the S&P and a couple of the other indices, based on the Chapman wave methodology of the MACD, that I would only get a G. I would only get a G in the Dow, and I'd only get a G in the S&P, and then we would come down sharper. I don't know if that's going to work out, but that's kind of what I'm looking at. There's your G in the S&P at 1950, in the XMI, I'm sorry, at 1915.40. We just saw the same thing in the S&P. So I'm watching this all very, very closely, believe me. Now there's one other, IYC. This is the iShares U.S. Consumer Services ETF. And it hit a high of 135.99. Better check it. Yep. And it's, even today, it's not very strong. So there are clues to say that we are bumping into tremendous resistance. And I've made it a fact that we will be watching in the weekly chart the up channel resistance really closely, because I always respect these inside track notations that I put in the charts. Sorry, I'm having a little trouble with this mouse. You see this inside track? And that's been the repellent zone right there. And it's been the repellent zone here as well. So I'm watching this very closely. The MACD is strong. The stochastics at 96%. I tell you, it has to be the daily chart that brings the market down if it's going to be pulling back, number one. Number two is you have to have a rising VIX, volatility index, as well as bad news. And so far, the news that's come out says that Ford had lousy monthly sales, and yet it's just screaming, and we got stopped out of our position for a profit. We should have just stuck in there. I've been wanting to hold it as a longer term buy and hold. But you know what? I just didn't stick with my methodology. Sorry about that. And now it's in leg E with not such good news in the sales. GM had good news, spiked to leg C, and now it's pulling back. Unbelievable how this is working. FCAU, which is in fact Chrysler, Fiat Chrysler, has spiraled to a peak, a leg, a D in the daily. A lot of this is there's a little bit of topping action right here on the short term. So we're going to have to see how that works. Let's go to Victor in Paramus, New Jersey. Victor, how are you? Victor, you there? I hear noises in the background. There's a bit of a delay. And Victor is about to ask me a question. Gone. Oh, Victor was right there. And now he's gone. Victor, I think you want to look at Emerge Energy Services LP. It's the same kind of chart pattern we're looking at in so many of these energy stocks. Here's my suggestion. It's trading at 58.76, up 2.76 after being smashed to the downside the last week. 58.76, up 2.76 after being smashed to the downside the last week. 58.76, up 2.76 after being smashed to the downside the last week. 58.76, up 2.76 after being smashed to the downside the last week. 58.76, up 2.76 after being smashed to the downside the last week. 58.76, up 2.76 after being smashed to the downside the last week. 58.76, up 2.76 after being smashed to the downside the last week. 58.76, up 2.76 after being smashed to the downside the last week. 58.76, up 2.76 after being smashed to the downside the last week. 58.76, up 2.76 after being smashed to the downside the last week. 58.76, up 2.76 after being smashed to the downside the last week. 58.76, up 2.76 after being smashed to the downside the last week. 58.76, up 2.76 after being smashed to the downside the last week. having gone from the 85s down to the low of 51. So if you think that there's a bounce coming, I would, I'm going to, let's see, based on the 120, I'm just guessing that you might have nibbled on a position. If you've nibbled, there's a break coming up. All right, the break's coming up, folks. I'll be right back. Dow's up 62, and I will be doing the 1 o'clock show.
Hands-on approach to managing your investments. And whether you're bullish or bearish on U.S. Treasuries, the ETFs from Direction Shares are there to help you magnify your perspective. Bull ETFs for a rising market and bear ETFs for a falling market. Direction Shares gives you the tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foreside Fund Services, LLC.
We're told to follow our passion and everything else will fall into place. I hope that's what each of you are doing each and every day. Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com, and my passion for technical analysis is what led me to the most fundamental discovery in pattern recognition, the Rhodes Momentum Indicator, market scanner, and trading strategy, a set of tools that identify the momentum and power of the trend, the likes of which have never been seen before, for every market and every time frame. Yes, folks, the trend is your friend, unless you're on the other side. New to technical analysis? This is the place to start. And experienced traders take advantage of the trend like never before. Experience the power of the Rhodes Momentum Indicator each day, available to subscribers of my newsletter service, Mastering Probability. I guarantee your satisfaction for the next 30 days unconditionally, so there's no risk to you other than being on the wrong side of the trend. Mastering Probability, available on the homepage of TFNN.com. And folks, live with passion.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Folks, I'm going to be doing Daryl's show at 1 o'clock today, and that is the Nadex, uses the Nadex platform, Diagnostic Trading Hour. And I just wanted to show you, we'll use a look at the 10-minute charts. Look at this 10-minute chart of the E-mini peak A, B, C, D. What do we go for? We go for D's. Goes again, A, B, C, D. What do we go for? We go D. 10-minute E-mini chart. Pulls back sharply. Trough B starts at peak A, B, C, D. And that's where we are. We're going to be watching this real closely. Looks a little toppy here with the MACD and the slow stochastic. We'll see what happens in the next period of time, and then I'll be back at 1 o'clock and we'll go through some of these again. Back to the EMES, which is Emerge Energy Services LP. I would just say that if you've nibbled on this, I would, man, it's a tough one, because all it has to do is break 54.75, the low of the day.